the overall shift in private equity, for example, has been that companies stay private longer. And so the public market is shrinking. You have 3,500 stocks in the US today. You had over 7,000. If you go back 20 years, companies are no longer going public at 500 million. They're going public at well north of a billion. Thinking about how to invest in those companies earlier on before that growth takes place, we think there's a huge opportunity there for clients.
Hey everybody, welcome back to The Connected Advisor. I'm your host, Kyle Van Pelt, co-founder and CEO of Milemarker. And today I am joined by Aaron White. Aaron is the Chief Growth Officer and a partner at Adero Partners, which is a great firm that is growing a lot. We're going to talk about that today with Aaron in his role as the Chief Growth Officer. But a really fun fact about Aaron is that he was a contestant on one of all of our favorite game shows, The Wheel of Fortune. And he solved 2 puzzles in the early rounds. And he also didn't have much to work with on his phrase at the end for a $30,000 puzzle. But how cool is it that he actually showed up on Wheel of Fortune and now he's here on The Connected Advisor to talk with us about growth in the RIA space. Aaron, thanks so much for joining us.
Thanks, Kyle. Yes, that was a fun experience.
Was it just absolutely gut-wrenching to, at the end there to have that final puzzle right within your grasp and then the letters, the consonant and the vowel didn't help you out?
It's much harder to do it when you're on stage with cameras zooming around and under time pressure than watching the show from home. The backstory there is that I was watching the show with my wife and yelling at the television, shouting out the answers. And she said, "You're so smart. Why don't you go on that show?" And I said, "Okay." Set my name in. And about 6 months later, I got an email, went to an invitation to audition for a spot. And a couple months later, I got the call and went down to LA and filmed. And it went by really quick. They actually filmed 6 episodes in a single day, back to back. And so I was the 5th episode out of 6 and got to watch the other tapings. But it's a lot harder to do it live, but overall it was a fun experience. I won a trip to Spain. I went to Barcelona with my wife and also got some spending money. So overall it was a good experience. Didn't win the big prize, but it was pretty tough.
Man, that's such a fun fact. I feel like when you go to parties and stuff, being able to say I was on the Wheel of Fortune, I mean, that's just that's a killer fact to be able to share with people. And thanks for sharing some of the inside baseball and how all that works. I'm sure a lot of people wonder how that goes down.
Sure thing.
So also in my research, and I think this is pretty public, but one of the things it says you love to do is spirited driving. And I was just curious of how you would define spirited driving. Does this mean getting a lot of road rage towards people when you're driving on the road? Or is it more trained racing and racetrack stuff or something completely different?
Well, I think that's certainly evolved over the years. When I was younger, I probably spent more time driving on the racetrack. These days, taking my kids out on the weekend in my convertible for ice cream and usually following the speed limit. I do enjoy cars and spirited driving when I'm by myself. I
love it, man. I love it. We'll talk about that a little bit. And I also found out too that you're a hockey fan. You coach hockey. It looks like your kids might play a little bit too. So I want to talk about some hockey after we get through talking about some of the work and industry stuff, if that's cool with you.
Yeah, sounds good.
So I want to start off with a question I ask every podcast guest, because I think it's really interesting. It's a good way to get these things kicked off. I found everybody kind of has a different path into the industry. Some people maybe a little bit more traditional, some people a little bit more circuitous. But what I have found is whether the path has been traditional or it is a little bit of a different route, everybody kind of had what we call a money moment that sort of inspired them to get into this space and into this industry. So Aaron, I'm curious for you, what was your money moment that led for you to want to spend your time working in the financial advice industry?
Started a business degree at the University of Colorado in Boulder. Did about 2 years there, came out to San Francisco, completely pivoted and went to art school, studied industrial design for a couple of years. And I think in that sort of second year, looking at the job opportunities, it was very competitive. Specifically, I wanted to be in automotive design and design sports cars, but certainly didn't have the freehand drawing ability. I was pretty good on the computer and Photoshop and rendering, but the freehand drawing just wasn't there. And so I had 2 half-done degrees and looked at the job opportunities in the job market at the time. Going into finance seemed like the right move. And so that was my money moment, I guess. We transferred my credits over to the University of San Francisco, finished my degree there, and then went to work in accounting.
Oh man. Okay. Very cool. Well, I appreciate you sharing that. And I know that Adero has been growing quite a bit over the past couple of years. You have a unique seat as the chief growth officer for a lot of that growth. I mean, I'm going to ask you just an open-ended question because I think everybody's growing through different means, right? Some of it's inorganic where they're acquiring firms. Some of it is incredible marketing programs and business development muscles. Like, what do you think is the greatest attribution to the growth that you all are experiencing right now?
Yeah, when we look at the data over the last 5+ years, pretty consistent growth from client referrals, introductions to friends, family, colleagues, mostly by word of mouth. We also receive some introductions through some lead generation partnerships and through centers of influence, mostly attorneys and CPAs. And so I think over the years, it's been pretty consistent there. We're trying to provide more content and thought leadership this year. And certainly seeing an uptick there in some inbound from those posts that we're putting up online.
Oh, cool. And what's the content look like? Is it stuff where you're trying to be really educational towards your target market client? Or I don't know, give us an example of what do you think is resonating?
Most of the content, I think, is planning based. We spend a fair amount of time working with clients through tax issues. So that seems to be the common theme. Everyone's filing a tax return. A lot of our clients are in California, are in high tax brackets. And so that is pretty consistent, something that we can provide value year in and year out for clients. And so we're doing a series of posts on various tax planning opportunities. The one that's being posted today is on exchange funds. So as a way to manage a concentrated stock portfolio, we're also publishing some content around qualified small business stock, around generational estate planning and wealth transfer. So those are the three topics that we're starting off with.
So I love that you shared that. And in my research, one of the things I found is that you guys have a passion for consulting people on QSBS, or qualified small business stock. And this is something I just learned about a couple of years ago, an incredible tax advantage tool for business owners and ultra high net worth clients. Yet still a lot of people aren't talking about it. And so I don't know if it's maybe like, hey, we're trying to keep this as a best kept secret or whatever, but why did Adero kind of hone in on, hey, this is an area where we want to be really excellent at and we really want to serve our clients with it?
Yeah, sure. Well, when you look at the tax code, the qualified small business stock exclusion is one of the most significant potential tax savings opportunities out there. The maximum exclusion is $10 million for capital gains. And so if you're paying the highest federal rate, that's $2.3 million. If you're in a state that conforms to federal QSBS, California doesn't, but New York and other states do, then you can save another 10% plus for some of the high tax states. So that's a pretty significant savings. And when you look at all the other areas of the tax code, that's probably stands out to me as one of the most significant in individual tax.
Absolutely. But I think too, you said some of your content is really planning focused. And I think with QSBS, there's actually a lot of front loaded planning in order to make sure that does go through the way that you really want it to, right? So, is that something where you're trying to tell people, hey, don't wait until, an exit or a liquidity event to start thinking about QSBS, like let Adero help you, years in advance? Because I think the rule is you have to hold that for 5 years for that exemption or something to qualify, right? So
Yep.
How are you all helping people get all of their ducks in a row with that to take the highest and best use advantage of QSBS?
Yeah. So for Section 1202, which provides the greater of a $10 million exclusion or 10 times your basis, there are several key qualifications for that. One is the 5-year hold, which you mentioned. 2, it has to be in a qualified trade or business. So that excludes most accounting firms or consulting firms, but really any product company should qualify. And the stock has to be issued at a point where the company doesn't have more than $50 million of gross assets. Founder stock generally qualifies. Early employees that exercise their options will generally qualify. But as you go further along in the company's growth, that window to exercise options and get real stock and qualify for QSBS starts to close. And so having conversations with early employees, with founders, while their companies are still private, creates an opportunity for us to, one, identify if they have QSBS or they have an opportunity to exercise an option and get QSBS. And 2, to think strategically long-term around what if a potential liquidity event will mean for them and for their families. We often meet with founders that have significant private stock holdings, and there are a number of trust structures that we can use to multiply that exemption, and oftentimes 4 or 5 exemptions if you have if you're married and you have children. And so having those conversations early on while the company is still growing and the value of the stock is relatively low compared to what it could be, we like to have those conversations early as possible.
Man, that's super cool. And I'm always excited to hear how people are doing that because, most of what the conversations are in our industry are about how advisors they do planning, quote unquote, which I think they do, but it's like, there's a lot that goes into planning, and then they're doing asset allocation and investment management. But so many firms out there like Adero are doing this deep, highly specialized expertise planning for people. And it's like, I love being able to help tell the story of not all planners are the same. Not all firms are the same. And people are really doing some incredibly high quality work for folks with really specific situations. So thanks for sharing that, man. Going back a little bit, I guess this would be under the growth thing, but the world has changed drastically since COVID, maybe even a little bit before COVID, but obviously with everything going remote, things going remote, you all polled all of your clients on their preferred method for meeting with their advisor, meeting setup, cadence, et cetera. And you all had some interesting findings around the preference for Zoom meetings. So curious to hear what those findings were and then how that changed how Adero operates now.
Yeah, well, at the start of the pandemic, we were all forced to leave the offices and then adapt pretty quickly. For a few years prior, we had been really trying to push towards using more technology, less paper. So when a client came into the office, we would have a digital screen. We would have materials that were presented there that were more dynamic. We could bring up additional information on the fly. We had some adoption there with the team. We had some challenges, I think, just with the technology and finding the right way to present it and have it be consistent as also portable, going to a client's home or their office and being able to have the same experience. And so the pandemic hit and it really forced us to adapt pretty quickly and change all the different presentation materials and reports that we do completely to digital, and then find a way to present those to clients. And so a lot more Zoom meetings there the first couple of years there. We did go back to office for a couple of days in 2022, and then we pulled our team and we first asked them, well, how do you want to work? The pretty consistent answer there was that people preferred the flexibility to work from home, wanted to see each other a couple times a week, but more in a social setting and for team building and collaborative projects, as opposed to just being in the same physical space and taking Zoom meetings with headphones on. And so privacy and having a quiet place to work became sort of a top priority for everybody. We carried on like that for about a year. At the same time, we were also having conversations with clients and inviting them back to the office since we'd reopened. If they felt comfortable coming in, would they like to take a live meeting? And we conducted a survey, and we found pretty consistently the result was priority number one was just around efficiency. How can we meet with you using technology and keep it under an hour? And so avoid the commute time on the way in, the way out. At the time I was working in San Francisco, parking down there in downtown is pretty challenging. And so it certainly wasn't a preferred meeting location for our clients. And so we really fully embraced the Zoom technology and the Zoom experience. And so we're remote first now. We've still got a couple of offices, one in the Bay Area, one up in Portland, but our clients continue to meet with us via Zoom. And we do meet in person periodically as well, sometimes social. We'll have a lunch or a coffee just to continue to build the relationship. But yeah, the technology shift happened a lot quicker than we expected, but I think certainly has been an overall improvement to the client experience.
Yeah, absolutely. That's cool. So that was a pretty big shift for the firm and for the industry and all of that stuff. I don't know. It just lead me to ask myself the question of what is really exciting you about Adero right now? As you kind of get up and you think about growth and you think about the firm, what has you really excited about, where you guys are going?
Yeah, I think the overall trend in the market in wealth management space has been around expanding the scope of service. So to be competitive today, you can't just provide asset allocation and build a portfolio. There are a number of technology solutions there, robo-advisors, if you will, that can provide a pretty low cost and well-diversified portfolio. And so for us, we've looked at all the other areas of planning and really tried to broaden the scope of the service. And our role with our clients is to be the family CFO or the central advisor that they look to coordinate and execute on all their tax planning and financial strategy. And so when we looked at our current service model, there were a couple of areas that we felt were maybe a bit underserved. We've got a great advisor team. We've got a great financial planning team. We've got in-house tax. We do tax returns for clients. The two areas I think where we needed to add some additional capability were in estate planning and also assisting with outside 401ks. And so we've had some recent enhancements there to try to, again, broaden the overall scope of service and really be that core advisor for our clients.
This podcast is brought to you by Turncast. We make game-changing content for fintech and financial services companies. Learn more at turncast.com.
401ks tend to be something that's either something people bring on either in hopes of maybe, getting, larger business or rolling it over, things like that, or maybe an afterthought in a lot of firms. How have you guys made that a unique competitive advantage for you?
For clients that have left an employer and they have the option to roll a 401k over, we typically will advise that they consolidate with IRA. Gives us a broader set of investment options. We can also include alternative investments and private funds through the IRAs that way. For clients that are still employed and contributing to their employer 401k, we use a technology called Pontera, and that allows us to have access to view the balances, to rebalance and reposition the portfolio without having to have a call with the client every single time and have them log in under their credentials. So they've got a pretty nifty way to create that link and also navigate the two-factor authentication on a rolling basis. We've been using that service for a few months now and have had a pretty good overall experience being able to help clients with additional held away assets.
Well, and you talked about estate planning too, which I think is interesting because one of the common themes that I think we're having in conversations on this podcast and outside of it is, especially for firms that are serving higher net worth clients like you are, helping with QSBS, talking about all that, is you kind of have to go beyond being an RIA and start to look more like a family office in a lot of ways. And so I think that is estate planning, it's tax, it's 401k, it's kind of this holistic view of what everything is. And you all have been doing stuff in the estate planning side for a while, but you're also rolling out some new visualizations and stuff, I think, too, to just sort of help make it easier for people to grasp the complexity of what's going on. You want to talk about that a little bit?
Yeah, absolutely. During the initial planning project that we do with prospective clients, we'll gather a set of documents. We'll look at a tax return. We'll look at investment statements, and we'll ask for their estate plan. And oftentimes clients that come in with an estate plan have no idea what's in the documents. It was prepared and drafted and signed 5 to 10 years ago. And over time, things change. Your preferences for how your assets are distributed, your preferences for the different fiduciaries will change. And oftentimes you ask a person what's in their estate plan, they have no idea. And so we've looked at a number of technologies over the years. We've experimented with a few. We finally found a partner that we liked. It's called wealth.com. And they provide a very robust platform for providing core document creation, abstraction of existing documents. So where you can take a document that's been done 10 or 15 years ago, it's in PDF, you upload it, their technology will scan through and create a summary of the key information in that document. So it's an easy way to quickly assess what they have in place and then identify some opportunities for change or for improvement. And then there's also a visualization suite. And so that creates essentially a flow chart of the way that a trust would distribute after the first passing, after the second passing, and list all the key people that are named in the documents, but in a visual form as opposed to a 60-page legal document that's hard to get through if you're not an attorney. That's something that we're just rolling out right now. We've had a few clients go through the process and had a good experience creating documents and using some of the other visualization technologies. But that's, I think, is going to be a pretty major enhancement for us this year.
That's really cool because I think, one of the big innovations that's happened in the industry over the past 7-10 years is like everybody's financial plan used to be this big binder, 30, 40 pages that, it was supposed to be very impressive, but clients weren't adopting it or they weren't necessarily utilizing it. Right. And it kind of led to this phrase I've heard a couple of times where it's like, there's a lot of value in planning, but maybe not so much value in the plan itself, right? Because it changes as soon as you would print it out or, all of these sort of things. Sounds like estate planning is going through a pretty similar evolution of, there's a lot of need to get all of those T's crossed properly and those I's dotted properly and to have everything infrastructurally set up right. But if you don't understand it, what good is it in a lot of ways? And so I think that's really cool what you guys are doing and how you guys are partnering with Wells.com.
Yeah, absolutely. And I think going beyond just creating the documents, you actually have to put the plan into place. You have to go and retitle your home and retitle your accounts and update beneficiary designations. And oftentimes we find that an estate plan was done, signed, but they didn't actually follow through on it. And so that's something that I think we can help with and make sure that you actually get the benefit of all the money that you spent and the documents that you created.
That's awesome. All right. So we've been talking about some of the cool things that you've all been doing. I want to, get to a segment that we do in our show where, Aaron, I just ask you to get out your crystal ball and look, a few years into the future of where things are going in our industry and where things are going with Adero. So get out your crystal ball. Tell me what you think the future of our industry looks like over the next 5+ years.
Sure. Yeah, I think there are two additional trends that we're looking at. One is in alternative investments. We're seeing that there are a lot more options for clients to diversify outside of the public markets, and alternative investments are becoming more accessible. Historically, most of the limited partnership funds were only available for qualified purchasers, clients that had over $5 million of investable assets. But we're now seeing a lot more options for accredited investors, clients with $1 million plus or high income. And so I think that's really important to have that access, to have that ability to diversify outside the public markets. The overall shift in private equity, for example, has been that companies stay private longer. And so the public market is shrinking. You have 3,500 stocks in the US today. You had over 7,000. If you go back 20 years, companies are no longer going public at 500 million. They're going public at well north of $1 billion. Thinking about how to invest in those companies earlier on before that growth takes place, we think there's a huge opportunity there for clients. And then the second thing that we're looking at is, I think, with AI, the large language models. We've experimented a little bit there. We think that technology is pretty interesting and likely just a way to really enhance what we're doing for clients to make our time more efficient. I think most of the models are a better version of a Google search. And so more efficient way to get through to the exact information you want. So I think looking up tax code items and looking up different planning rules for certain things, it gives you a quick result there. Also good for outlining maybe talking points or articles that you might share with a client. Certainly some limitations there. I think the unnatural word choice is something that sticks out. And so I don't think it's a replacement for client communication, but certainly an enhancement and something that can help save a little bit of time.
Yeah, that's great, man. Curious to hear your thoughts on this because this seems to be something I'm talking with a lot of people about. We're at Milemarker really excited about AI and large language models too. But in an industry like ours that's pretty regulated, there's some trepidation about sort of just throwing your data out there into open LLMs and things like that. So a lot of larger firms are kind of asking, hey, how could we maybe bring, LLMs into our business and a couple of things like that. And, at Milemarker, we help people get their data right so that, they can have confidence that those things are working properly. But how are you guys thinking about that? Are you that worried about maybe some of the open stuff or, how are we going to take advantage of that innovation?
Yeah, absolutely. I think there's certainly a lot of risk there. To date, we've only used it really for the search functionality. There isn't any private information, contact information, nothing is put into a model. It's really just, you ask a question and you get an answer, but just general information. We think that that's a good use, but yeah, you don't know where the data goes. And that's been our biggest concern. Yeah. So we don't want to put anything in there that is sensitive in nature.
Yeah, 100%, man. Well, that's great. I really appreciate you dropping some of the insight and knowledge around the industry itself and what you all are doing to, evolve in such a fast changing environment. So I want to pivot now to ask you a little bit about hockey, like we talked about in the beginning. So, I mean, did you play hockey growing up? Like, how'd you get into that? How'd you get into coaching? Tell us a little bit about that story.
Yeah, sure. Yeah, played hockey growing up. Started a little bit late, age 11. Played up through high school. Played a couple of years at college at the University of Colorado, and then started coaching when I was 18. I've been in the Bay Area about 23 years now. I've coached a youth hockey program up in San Francisco, the San Francisco SaberCats. My son is 11 years old now, and he plays for their team on the travel team. So I've been coaching him for quite a while. I got him on skates at 4, so he's got a bit of a head start on me, and he's a pretty good hockey player. But yeah, I still play a couple days a week with some friends, just pick up games. Still have all my teeth. I wear a full face shield. So just trying to stay fit and avoid injury at this point.
Yeah, I love it, man. Are you you and the family like Sharks fans, or are you Avs fans from being in the Boulder area? Like who's the NFL or NHL team that we're pulling for?
Yeah, Colorado is my number 1. I think the Sharks are my number 2. I've been to a lot of Colorado games. I got down to Tampa a couple of years ago. I got to see Game 6 where they hoisted the cup. I brought my son down to that game.
Yeah.
So that was incredible. They're looking pretty good this year, so we'll see if they can repeat.
Yeah, man, it's been a good run for them. And then, when I was growing up, those were right in the center of the Joe Sakic and Patrick Waugh days. So, hard to, if you were in that area, I don't know how you couldn't be an Avs fan when you really think about it.
Yeah, I moved to Colorado in '94, and the team arrived the next year. So we'd see them tickets when I was growing up there, and went to a lot of games. They had a few really, really good teams back then in the late '90s, early 2000s.
Wow, what a blast, man. Okay, so, in the spirit of lighthearted nature, we're going to move into the final segment of the show, which is what we call the Milemarker Minute. It's a lightning round series of questions. I'm going to ask you a couple of them. And the goal is to try and have them all answered in a minute or less. I'm not going to hold you to it, but that's the goal here, just to get to know you a little bit better outside of the industry. So you ready to fire away?
All right, let's go.
Okay. So I know you loved sports cars, and I know you loved cars and spirited driving. And you said you wanted to design sports cars as a career. But my question for you is, like, what is your all-time favorite sports car?
Well, I love Ferraris. My son's name is Enzo, if that's any indication. So
yeah, that's awesome.
That would be my favorite.
What year and model? I mean, I know you've got one that your dream car is a Ferrari what?
Well, I own a Ferrari California.
Oh, very cool, man. That's awesome. Okay. I know you and your family love to travel as well. You talked about the trip to Barcelona, one through Wheel of Fortune, which is super cool. What is one place on your bucket list you still haven't traveled to yet that you would love to get to?
That would be Japan. My wife loves fashion. We both love sushi. A lot of history, a lot of interesting architecture. So we'd love to get out to Japan someday.
Very cool. If you were not working in the financial advice industry, what industry do you think you would be building your career in?
Ooh, that's a tough one. Probably giving some other type of advice. People have always said I'd be a good teacher. You get the summers off. That might be attractive. Or coaching hockey.
Oh, there you go. I love it. Fantastic. And then who do you think is going to win the Stanley Cup this year?
Colorado Avalanche.
Colorado Avalanche. I love it, man. I front ran my question I already had planned for you on the lightning round. So we got a little bit of a spoiler there, but you killed it. You got it all done in less than a minute. So nice job on that. And I think you've shared a bunch of really helpful insight today. So thanks so much for coming on the show, sharing some of your knowledge and sharing some of the story about Adero.
Hey, I appreciate it. Enjoyed the conversation as well.
All right, everybody, that's been another episode of The Connected Advisor. Thanks so much for listening. Please make sure that you click follow or subscribe wherever you are listening to this so that you can always be notified when the next one comes out, and we will see you on the next episode.